Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. I had put out an update yesterday on MP Materials, symbol MP, going from a buy to a neutral after a really great run. Uh, was up substantially, and the buy sell that we implemented was up 82% over 30 days. So it was really a kind of a home run. But today I wanted to go over my current buy recommendations in order of things that I'm acting on now to things that I'm less acting on or more cautious on. But all these are doing really, really well. Most of them are doing really, really well. So with that, let's get into it. I want to make this short and concise. So Verizon, this is one you could be buying currently. The VZ is the symbol. This is the big picture, 1, 2, 3 year potential inverse head and shoulders with the left shoulder, the head, the right shoulder. It's like a man or woman hanging upside down in your neckline. So if it breaks out over 45, you measure from the bottom of the head to the neckline, you project that distance upward and you get 63. So if I'm right about this and it does turn into a bullish inverse head and shoulders pattern that's intact, you've got major upside, 50% upside, you got a 6% dividend. And what I'm looking at right now is this triangle, this consolidation, symmetrical triangle over here. So let's take a look at that. My buy stops at 45, but let's take a look at this consolidation after the big up move in Verizon over the last several months. And here we are. And we've got all our touches, A, B, C, D, E. We've got all the touches, and we're coming down near the support line here. So, I don't want to see it break uh, this support line. I think that where we were very overbought and had a negative divergence back here, we now have worked off that negative divergence, basically going sideways. So again, this is showing us a $50 price projection on just this triangle. And what is that? I don't know. It's about 20% higher than where we're at now. Let's take a look at the point and figure chart, which is really interesting. And so we're right on the support line here, the bullish trend line. So this is a really good place to be buying this because if it breaks it, you're going to get out at 40 or whatever that number is. And the point and figure price projection, which is not as subjective as mine on the previous charts, this is purely supply and demand. We have a $61 price projection. So, that's basically 50%. So Verizon looks great. I'm going to move on to the next. TAN, the Invesco Solar ETF. And you can see this was once at 130 and now it's down at 38. So this is something that's not, again, as a market technician, we're trying to identify new trends at an early stage and then stay with those trends until they change. So we have an ending diagonal pattern here, these two converging trend lines. Those are found at the end of major market moves, in this case down. And we got a breakout and then we got a retest and then we had a big week last week and we had a little bit of a pullback last week. You can so I was able to start to buy this. I got 1% in TAN. And so in my portfolio, I use for an ETF, which has an array of companies. This probably has 100 solar companies. I can buy up to the way that I look at it is I'll buy up to 6% in something like this eventually. I'm at 1% right now, so I'm hoping we get a little bit of a down move. We got a confluence of moving averages all coming together, and it's possible we get a type 2 convergence where this might pull back and give us a chance to really load up, but you don't really know that. So, oh, the other thing I wanted to point out on here is the inverse head and shoulders pattern, similar to Verizon, that is developing. This one developed and broke out. You got the left shoulder, the head, the right shoulder, and here's the neckline, and it broke out. And so That gives us a $47 price projection just on this small pattern, but I think there's a lot more here. I shared the long-term picture of TAN when I initiated with a buy. I'll clip it on this one so you can look at it, but the potential here is for a much bigger move. So let's take a look at the daily. I think I got the daily here. And so here's the inverse head and shoulders pattern that we broke out of. Here's where I purchased. We've had a couple of days of consolidation. I've slowly added some shares here. If it was down tomorrow on Monday, I would definitely be buying this. If it gets down to 36, I'd really be loading up on that. There's no guarantee that that's going to happen though. So this is a pattern that's intact, and anytime this is down, I buy. When it's up, I sell less. When it's down, I buy more than I sold. And that's the way I build my position and lower my cost basis. Here's a point and figure chart. We got a brand new bullish trend line and breakout. We don't even have 10 X's, column of X's yet. So this is not overbought according to the point and figure chart. And based on that, we have a $53 price projection. What is that? 40% potential upside. So again, we're identifying a new trend at an early stage. So I really like TAN. I'd be adding to that on any down days. Here is, I think, something that's steady and looks solid and looks good. I don't have a lot of anxiety about buying national retail properties. This is a REIT. N is the symbol, and we have an inverse head and shoulders pattern that's intact, and our price projection is 50, and we're at 43. So this pays a 5% dividend, and we've had a pullback here the last few weeks. And so it's given me a chance to add to that. And if you follow what I do and you want to mimic that somewhat, that's what these are the three in order, the ones that I'm adding to. I'm up to this is an individual stock, so I'll only hold maybe 3% in an individual stock, maybe a little bit more as it goes up, it grows, but I'm up to what I want to have in this now. This is one that's going to either this is going to have to move or I'm going to cut bait on this. The pattern is textbook. We have a big symmetrical triangle, A, B, C, D, E, after a major move before that. It's working off its overbought condition sideways. That's a sign of strength. We got the breakout. We got a retest. That's where I initiated with a buy. And we got off to a good start. And I see 5 waves up according to Elliott wave theory. I don't want to get too technical here. And hopefully this is just the pullback, which is natural. After a 5-wave advance, you get a 3-wave pullback, and then you'll get another 5 wave. So that's what we're looking for. But let's take a look at the daily chart. The price projection here is 63. I mean, it's a huge potential gain here. I worry about natural gas prices. Natural gas has been weak lately. The chart still looks like it is ready to go higher, but just like this chart, we got to see it. So let's take a look at a daily chart right here. And so this is going to tell me, hopefully on Monday. So we have a bearish rainbow convergence where all these moving averages have come together at, let's call it 38.5. And at that time, we got a bullish hammer here. So a type 1 convergence would mean prices would sit here until the moving averages come down. Oops. Until the moving averages come down and test that. A type 2 convergence is prices will retrace back up to this, and usually in short order. And if it can't break through, it promises a new low. So what I'll be looking for, I'd love to see a type 2 convergence, see this come back up to 38 or so, 38.5, test this. If it can't get through, I'm out because it promises a new low. If it gets up here, I'm going to sell half of it anyway. And if it's able to break through, then it negates this bearish convergence and we'll be on our way. And I'd have to chase it on the way up. So I'd sell half on a type 2 convergence if it stops here. And then if it breaks through, I'd buy that my other half back at a slightly higher cost. But I think the reward to risk in that kind of uh, execution would be good. So this is something to watch. If you don't own it, you might want to buy it here. You might get 38, 38.5. But again, if it can't break through, I'm going to get out and move my stop up a little bit. Silver. Okay, this is big picture silver. Big 15-year symmetrical triangle consolidation after the last bull market in silver. And we have all kinds of little patterns here that got me involved at a much lower price. Our price projection here is 64, and we're currently at 35, let's call it. Yeah, 35. So, it had a big week, up 7% last week on all three of these commodities, silver, copper, platinum. When something's up 6, 7% in a week, you should be selling some of that. We're just starting to get to overbought territory. It's not a very overbought signal like the last one we got here, but it is entering the overbought realm here. So you got to be selling a little bit, just some, just a few shares here and there. That's what I'm doing. So now we're going to take a look at a shorter term chart. And when I took a look at a daily chart, people really chase this on Friday. Look at this big volume bar. It's the largest over the last 5 months, so people just didn't want to miss and they jump in it. So what was I doing? I was selling some shares. I still have a good amount in silver and gold and copper and platinum. But again, when was the time to buy? When it was going down back here. Also, we had a couple of down days early in the week last week where I was adding more shares and then I was selling less and selling less. But we're getting, possible negative divergence. We'll see what happens, but I'm still bullish on silver. I'm just saying, you need to risk manage these because they're very volatile. And the other thing I just want to say, and I'm not going to get into a lot about it, but the US dollar, the sentiment is so bearish on it that I would not be surprised to see a rally, short-term rally in the US dollar, and that'll make it tough for commodities. One other thing with commodities, the CPI, I believe, is being released on Wednesday, the Consumer Price Index. So it'll be an inflation gauge. And I think you're going to see a hot number, meaning you'll see more inflation. We got a low inflation number last month, so everybody's like, oh, the Fed's going to cut. This time, I think we're going to get a hot number, and a hot number is going to scare people. So this is, look at copper up 8% last week. I sold, I was selling. And we're getting up. We hit 35. My price projection on this huge ascending triangle, flat top, ascending support line. So it's not as attractive as it was down here when I went bullish. So where I had probably 6% in copper, I might be down to 4% now. But maybe I probably about 5% now. But Wednesday's this big number, that may be a euphoric move in these commodities, and I would lessen more uh, than I have been. So that's CPER. It's been a great call, if I may say so. Platinum, again, same thing. You should have been selling last week. You should have been selling the week before. 144 is our price projection. We got to 130. So, I mean, I still love platinum. It could go past 144, but it's not as attractive as when I bought it down here. And look at how overbought we're getting, and nothing goes in a straight line. So I've raised my stop up to 95. I still like it, but I'm selling some. And Wednesday, if we get some big up days today, Monday, Tuesday, Wednesday, Monday, Tuesday, I'll be selling more of this. S&P 500. So this is again an order list of possible in order of the most attractiveness. Now I've totally, not done a good job where I went bearish here. I should have went neutral once it broke above my stop, and I let it go. And then I was traveling and I let it go. But I'm staying bearish on this. We still got a huge negative divergence here, and so I'm starting to add to my short position. This is actually still in the money. I don't have the number. I can figure that out. But here's where we went bearish. Here's where I went neutral. Here's where I went bearish. So made some more money on that. Here's where I went neutral, bought in at a lower price. I just went bearish here and rode this up. So, I'm probably actually still in the money in this slightly, but I didn't manage this as well as I should. But it's something uh, that is contrarian because everybody's so sold on this market. FXI, here we got China. China looks fine. It had a slight when we were drifting higher on the S&P. This was flat. Had a couple of down. Had a down week last week. I added a little bit. I'm going to initiate on another Chinese thing, and I hope to do it tonight. Exelon, I'm really cautious on this. Interest rate things, the CPI number, if it's hot, if it's signaling more inflation, we probably get a rise in interest rates. And I don't know how utilities will respond. They are interest rate sensitive. We do have a potential head and shoulders bearish top here. So, my stop is right here at 42. I'm not adding a lot here, selling a little bit last week because it was up, and it almost hit our price projection a few months ago. IEF 10-year Treasury, I'm moving my stop up to 92.50. Again, I'm just not feeling real comfortable with the CPI number coming out on Wednesday. We're still in the money. We're not going to lose, or unless it shoots down 5% or something, which is unlikely. But that's where we're at on that. Not a lot of confidence. What I've been doing on up days is I sell some of IEF and I buy IEI, which is a 5-year Treasury, which has less volatility, or the 2-year Treasury, which has less volatility. I want some amount in bonds, but I'm down to a small amount. Thank you for watching Chart Built Wealth, profitable investing with technical analysis. Please like and subscribe. Have a great Sunday. Good trading to you tomorrow.